मैं तुमको थोड़ी देर में बना दूंगी मैं भैया को दिखा
Hi guys, we will wait for another 5 minutes and let others join and then we can start.
You're right.
Hi NRI friends, thank you so much for joining us on the weekend. Let me introduce myself. My name is Raghav and I look after the investments vertical for SBNRI. SBNRI is a one-stop platform for NRIs and OCIs, and we offer comprehensive services across banking, taxation, and investments for NRIs and OCIs. We have global partnerships with banks like HSBC and Yes Bank for our banking partnerships. We currently have about 2000 plus NRIs customers who have bestowed their trust on us, have invested about 100 crores plus in various asset classes like mutual funds, fixed deposits, commercial real estate, PMSs and AIFs. We were started back in January 2020, so about 4 years now. This is also our fourth anniversary being January. Uh, if it's speaking to uh, ample of NRIs and OCIs across, we found a lot of interest was towards real estate investments in India, particularly towards residential and commercial real estate. However, there are a couple of the problems which particularly NRIs and OCIs face. These are like very, very low liquidity in the asset classes. Even if you want to buy or you want to sell it across, you have to travel to India, particularly to sell it, right? There is high commitment when it comes to maintaining these properties. So for someone who doesn't stay in India and has to get a tenancy agreement done, he has to come and sign, or otherwise he has to give a POA to his relatives or friends in India. That becomes a huge hassle. Plus, residential real estates in India do not have enough rental yields to be that lucrative. They fall anywhere between 2 to 3%. And if you want to invest into commercial real estate, the ticket sizes are really high if you want to get a decent amount of yield of 8 9%. All of these problems can be solved with fractional real estate. So, wherein you don't own the complete property, but you own a proportion of it. It has very, very good rental yields, about 8 9%, plus you get capital appreciation as well. And in order for us to facilitate these investments, today we have Mihir with us. So Mihir currently dons the hat as the head of investments for hBits. hBits is one of a very, very huge firm with respects to fractional real estate ownership in India. Mihir has played part in HSBC, HDFC, Citibank, and has over 22 years of experience in managing and structuring real estate deals in India. So, pleasure to have you, Mihir, with us. Would like you to take it forward,
Thank you, Raghav.
the NRIs and OCIs towards this very, very interesting opportunity. Would love if you would start from the base as to explain them what fractional real estate ownership is, how it generally functions, what are the regulatory authorities there, how do you regulate the entire deal, how to structure it, and what sort of returns can clients expect, and also present the opportunity which is currently available. Thank you, Meet. Over to you.
Sure, sure. First of all, Raghav, congratulations on your fourth year anniversary. I feel glad that I could be engaged with you and your clients at such a nice time. So, congratulations to you and your team.
Thank you so much.
Um, and just to hello to everybody wherever you all are. It's about 10 p.m. here in India, but greetings of whatever time you all are there. Just to very quickly jump into essentially what we do, although Raghav did explain. We are basically one of the pioneers of fractional ownership in India. We are a 5-year-old firm. Um, and thanks for sharing the screen. We are a 5-year-old firm. Our founder, Mr. Shiv Parekh, he's a Harvard Stanford graduate. He's also briefly worked in Citi there as a trainee, and after that he came back to India, started a co-working space. His family is in commercial real estate construction since 36 years. So the asset class that he's created in a lot of ways is also credit to the DNA in his blood in terms of commercial properties in India. Um, while Raghav has already shared a little bit about me, but I've been in banking for 14 years, marketed and managed a lot of types of products. If Raghav briefly mentioned, he works closely with HSBC. I was there in HSBC for half my banking life. Yeah, very regularly, we used to deal with NRIs. We used to create products for NRIs. I don't know how many of you are Premier HSBC Premier customers, but if you have an HSBC bank, I guess most of you all will be Premier customers. I used to be part of the team that designed those products and what kind of offerings we can keep improvising and things like that. So good recall, good memory of HSBC. And then last 8 9 years, I've been in luxury real estate, both on the residential side and now on the commercial side. And to me, fractional ownership is a perfect mix between uh, investing in a financial product with a hardcore real estate flavor, and with a lot of safety checks that in the traditional real estate that you generally invest in, a lot more safety and lot more clarity and a lot more transparency. In fact, almost absolute transparency. And that's why I think it works. I would like to share with you all that just to give you some data points. Uh, uh, in India, whatever investments comes through NRIs from wherever, whichever part of the world, in any typical, let's say, a residential project, the NRI investments in terms of percentage is anywhere between to just 12 to 15% of their total sales. In fraction ownership, that's double. Uh, for us, in fact, 30%, 35% of our clients are investors, are NRIs. And why I'm stating that point to kick off the session is for a simple reason that it's much more hassle-free for you guys to invest in commercial real estate thanks to fraction ownership. Uh, for a simple reason that you don't have to see the property. I mean, you, if you want to, you can, but you don't have to really see the property. You have to not travel anywhere to wait in long queues of registrations. Although a lot of digitalization has now happened in India, but some things are still quite same. Managing the property and then exiting. The whole life cycle of owning a property in India still remains a little bit of a slow process and slightly unpredictable. Most importantly, all of you would have probably, or most of you would have bought apartments back home, maybe one, maybe two, maybe more. Weekend homes is also picking up big time. Might some of the y'all might have invested there. The yields there, the rental yields in India, thanks to the very high prices of buying, do not go beyond 2 to 3% anywhere in India. Whichever place you've bought, very rarely would you get anything close to even 3% or 4% rental yields in residential apartments. And I have been from that space, so I can tell you with a little bit of experience there. In commercial property, why fraction ownership is working a lot in commercial property is for the simple reason that first and foremost, gives you 8 to 9% gross yields. Um, Everything is digitalized. You get the rent every month hitting in your account. Hardly any financial product does that. It's slightly better than an FD, or rather, I would say significantly better than an FD by at least 200 bips, and somewhere close to a mutual fund when you actually exit the property. So typically, we try and push the investments returns to about 15 to 16%. And so it's a perfect mix between a fixed income product based on real estate, and when you exit, you obviously reach a good 15-16% IRR. Um, and I'm reading a lot of questions, so I'm just going to address them once I just cover the brief on the property. So yeah, that's what I would just like to put things in perspective. As far as the property itself is concerned, Raghav, can we move the slides? Yes, thank you. So I'll just jump into and let me before that, since Raghav requested me to cover the structure. For those of you who've never invested in fraction ownership, at least in India, there are two things that I would like to quickly tell you all. The way it works is actually quite simple. We create because there are multiple owners of the same property. Typically, in every property we do, it's 100 plus co-owners. So what we essentially do is we create a special purpose vehicle, which is typically a private limited company. You get equity share ownership of that company, and it's all, you can see it on a website, and you can see who are the co-owners and things like that. hBits is the property manager, the fund manager, and the tenant manager, whatever you call it. We all in one kind of a hat. So and that's why it's hassle free for you. So we find the property, we do the deal with the seller, we build the buyers, create the structure, manage the property, and then ongoing tenant management and all that is done by hBits. And then obviously our end goal is to resell the property in 4 to 5 years. The second update that I'd like to give you is just recently, about 3 weeks back, fraction ownership has been officially approved by Securities Exchange Board of India as a micro sector and medium real estate investment trust. which is sort of gives a lot more legitimacy to this product. In fact, exiting the this investment will become much more easier. In fact, once it's all comes in place in the next 3-4 months, you will not be really dependent on hBits or any sort of a mediator in that sense if you want to sell your share in the market, because there will be your share will be listed on a stock exchange like any other REIT product. I don't know if you will all have invested in REITs in India, but it's a very smooth process in terms of investing if you want a dematized form of real estate investment in India. So that's quickly about the overall sort of thing. Let's jump into the offering right now. Just to give you a very quick update, we are 90% funded in this property. We had launched it in November end. We are 90% funded, so there are about I think a dozen units left in terms of sales. So just to give you a sense. So basically, as you would know, we take only generally grade A kind of buildings. The grade A buildings are buildings where the building quality is good, construction is good. There are generally good tenants in a grade A location. This is a location called Goregaon East in Mumbai. I don't know how many of you all are from Mumbai, but this is a hub for all tech and banking and finance companies, right from JP Morgan, HSBC, Citi, everybody. They all are in this area, so that's why we've been lucky to find this location. We are selling. I'll come to what we are selling. The tenant is an Indian messaging solutions platform called Gupshup Technology. In fact, it's headquartered in California and has offices in several countries across 4 continents, I think. And it's very important for you all to understand what is good about this product. And this one slide in sort of sums up a lot of things. This is the fourth term that this tenant has renewed. In fact, in December 23, fourth term renewal is essentially means that they have been here for a long time. They will continue to be here for a long time. And because it's a ITES kind of a hub in terms of an area and talent attraction, their likeliness of continuing for a lot of years to come is very likely. The agreement is 5 years from December 23. So you can sit back and enjoy the rent at least for 5 years. Out of that, 3 years is the lock-in period. So they can't exit even the worst case in before 3 years. And it's a whole floor that they rent. And in fact, they have rented one more floor just in the same building very recently. So they are just expanding very fast. Basically, the tenant is very good quality. They are a solution provider to the big tech companies like Google and Amazon and these people, where all the chatbot and messaging solutions that you see, this is the company that provides the backend systems to these big tech companies. So that's how good the tenant is. And most importantly, we have been able to negotiate a below market price in terms of the buying price. So it's 14% below the average market. And this is as per official valuations and certified valuers. The IRR that we are targeting is 15.49%. The first year gross yield is 9%. The average yield over 5 years is 8.4%. And the minimum investment, like I said, is 25 lakhs. Can we move to the next slide, please? Yes, so this is just a quick wrap up of the builder. Although it doesn't really matter, it's a 17-year-old building, and the property we are buying, or rather we bought, is not from the builder. It's from one of the original investors, and it's a direct deal with a group of landlords who co-own this property. Next. Yes, this is the building itself. If we can go to the stack plan, the next slide, please. Yes. So as you could see on, we are selling the first floor. The entire first floor is leased by Gupshup Technology. And they, like I said, they have rented half the floor on floor number 3 also very recently. And as you can see, it's the other tenant profile, a lot of MNCs, big company from India, Reliance, Teleperformance is a big ITES company, all very, very good tech ITES companies. Next slide. Yes, this is the floor layout in case you all are interested. Not that it really sort of matters. You don't own, let's say, a particular area of the office and all that in that sense. But this is just out of good hygiene. We would like to show you what you are exactly buying into. It's a 13,500 square feet area. There are about 770 workstations. Just to give you just a sense in terms of what you are buying, broadly you will be owning about a couple of workstations here. This is just to give you a perspective. You are ultimately owning an equity share of the company, but just to give you, ultimately you're buying real estate in whichever form, so you need to have a sense of what you are buying. So that's why I would always like to spend a little bit of time on the layout and what you're what how much you typically would own. Next. This is just quick snaps of the building and the property and the facade. If you can see, it's a very tall and nice lobby. In fact, many of you would know Mumbai metro system is coming up very fast. The entire system is going to get completed in about 1.5, 2 years. But the metro is already active and connected to this location since about a year now. So it's extremely well located. And why that point is important is we have to ultimately resell the property again after 4, 5 years. While you enjoy the rent and things like that, we want to facilitate an exit also. And accessibility, attracting talent, accessibility is very key, especially in Bombay, because metros have not yet come throughout the entire city, and this is one of the few places that is connected via metro. Really adds a lot of points, very close to the railway station. Mumbai still continues to be a place where people like to prefer travel through public transport still. So that's why this aspect makes a lot of sense. Next. I anyways shared with you the profile of the tenant. So I don't think we need to spend time here, but basically they are one of the most biggest companies in this space in terms of messaging solutions. The most emerging one from Asia, and it's headquartered in California, like I already mentioned. Next. Yeah, this is where the company is already present. They are in across 30 regions. They have offices across all these places. It just gives you a sense of how big and how multinational the company is. Next. These are the clients of the tenant. A lot of big Indian companies, but more importantly, a lot of big global companies are already clients of this company. So let's say on your Amazon, the chatbot that you see when you coordinating for a delivery or something, that backend system this company provides. So just to give you a perspective on what they are. Next. This is just a few case studies. Next. Yeah, so this is just a location overview, guys. These are all actual images. Uh, Next. Yeah. So like I said, the connectivity in Mumbai is extremely important. It's just 200 meters from the main highway called the Western Express Highway. The metro station is just literally 400 meters. It's very next to the Bombay Exhibition Center, which used to be the only major exhibition space in Mumbai. Uh, Thanks to the proximity to the airports as well as being on the main sort of highway. Uh, it's very close to the Jogeshwari Victory Link Road. The railway station is just about a kilometer, and the airport is just about 7 kilometers. Next. Yes, this slide is very important from the perspective of you understanding what you are investing into and which location you are investing into. It's not just we covered the tenant, we covered the building, we covered the floor space, but the big big story always in, especially in commercial real estate, is when you want to resell, it has to be resaleable. And for that, the location matters a lot. We've just highlighted some of the main buildings and other commercial buildings here and the main tenants in this area. Of course, there are a lot more. But just to give you a sense, in Goregaon East in Mumbai, there are only three major grade A locations. One is Nesco IT Park, one is Oberoi Commerce, and one is Nirlon, and the other one is Silver Metropolis, which is a standalone building. All other are much larger buildings. Guys, the demand supply obviously plays a big role in commercial real estate, like any real estate. But here, generally, just to give you an overall sense, the office uptake in India is going much higher. People are hiring more and getting into much more space. As you all know, we are not working from home anymore, most of us, fortunately or unfortunately. We are back to office full scale. And the supply available in this particular location is literally like there is 95% occupancy across these three main hubs in this area. What that tells you is that there is very little supply. Most of the companies are top Indian and MNCs because it's a good location, mid-center in the western suburbs of Mumbai, and it's also connected through two main arteries to the central suburbs. And the tenants are, as you can see, all really good tenants. A lot of them are multinationals like JP Morgan, Deutsche Bank, Ernst and Young, eBay, and the likes. And in this particular building, there is literally no supply. This was the only floor available for sale, and we grabbed it with both hands for a simple reason that to find good quality supply and also give you an 8 to 9% yield, both is extremely difficult, for a simple reason that we get tons of supply where you can get 6 7% yields, but obviously that's not something that you would typically invest in, right? So we grabbed this property with both hands because there is zero supply in this particular building. This was the only floor available, and we took it up immediately. And as you would see, we've took just about 30 days to get 90% funding in this particular property. Next slide. Well, for those of you who are interested in some details, I'm sure Raghav and team will share this with you separately. But basically, just to give you an overall sense, we get valuation reports from American international property consultants like JLL and CBRE and the likes. They are our certified valuers. They give us exact registration data of the rents that each tenant is paying for what area and in which building. And basically, there's a long list, obviously, but just to cut it short, uh, the average rental in this area is about 134 per square feet, INR 134 per square feet. This particular company is paying 117 per square feet, which is 14% lesser. And why it's very important for obvious reasons. There is a lot more scope for the rent to go up in the forthcoming renewals after 5 years, and that's why it's a very important data point. Next. Yeah. Yeah, this we've sort of already covered. This is the overall sense. The cost, we give an entire breakup of every penny in terms of the entire transaction, the cost of the premises, the stamp duty and registration, right down to the last rupee, advance property tax and common area maintenance collections, legal fees, acquisition fee, reserves, brokerage, everything. So we obviously use intermediaries to find us the right properties. The cost of the premises that you are buying is coming to you at INR 17,474 per square feet. The market price of the very few transactions that have actually changed hands in the last 10 years, the current market price is about 19,500 as per the JLL report. And for those of you who are interested, we can share the valuation report as well. Everything is, like I said, in black and white. What that essentially means is that you are buying the property at a 15% market average market price. In a way, you're buying at discount, which improves or sort of guarantees a good sense of appreciation when we decide to exit after 4 to 5 years. Next. This is just a little more detailed breakup of the financial model. Like I said, it gives every penny's account in terms of where the cash flows and inflows and outflows are. Next. This is just this is a growth sensitivity. So basically, we are here justifying what is the annual appreciation that we are assuming for this property over the next 4 to 5 years, and why we believe that there is a 15.49% IRR expected when we sell the property. 8.5, 9%, like we already covered, is already coming to you every month in form of rent. The appreciation will be another 7-8% after 4 5 years. Next. Yes, that's just a fee structure. And we've already covered the investment thesis. It's a 9% entry yield. The internal rate of return after 5 years is going to be 15% plus. The licensee I've already explained. It's in Goregaon, strategically important location. You are investing right now at the beginning of the 5 year term, and it is a fourth term. So they are practically the 16th year in this place, and plus there is a 3 year lock-in period. So it's all the right tick boxes as far as having a good tenant and the good yield is concerned. Next. Yes. Well, about hBits, we've already covered. So maybe I'll jump to questions. Raghav, do you want me to jump to questions?
Thank you, Mir, for such a detailed introduction to the property and the structure. I have a couple of questions which I have noted down from the chat section, and I have a couple of my questions as well. So let's take it from
Sure.
there. So a couple of people are asking, how does the capital appreciation work in FRE? I would like to add another which you have already covered. What would be the ballpark capital appreciation you see in Bombay happening? So maybe if you can
Sure.
take it up.
Sure. So, I'll give you data points, but I'll also give you a more practical, ear to the ground kind of answer. I have also worked with an international property consultant in my last stint, called Savills, which is a UK listed property consultant, and we used to do a lot of these analysis surveys regularly, right? Commercial properties, the capital values are extremely high, especially in Bombay, because when we say grade A supply is a kind of property that typically only top MNCs and top listed Indian companies generally like to lease, because they want to give a good environment for the employees and things like that. And the grade A supply in India, and especially in Bombay, is very, very limited. And the uptake is very high. So just to give you a sense, the capital values are extremely high. The typical price in this area is hovering around 20,000 per square feet. In some of the better buildings than even this building, the prices are at 25 to 27,000 rupees per square feet. We are entering the price at 17,000, 474 per square feet. And why I'm repeating that is give you a sense on appreciation, right? Which is the main question. Uh, in commercial properties, the general appreciation every year across Bombay, but in general, the range is anywhere between 3 to 7 to 8% every year. Even if you get that much appreciation over 4 to 5 years, you achieve an average appreciation of 7 to 8%. And that's considered good because of commercial properties. Just a quick comparison with the residential properties. In the last 5 years, residential properties in Bombay have appreciated by 3%. And if we average it out over across locations, then it's 1.5%. Because obviously there's a lot more demand, especially after COVID. A lot of upgrades are happening. Um, Nuclear families are taking to bigger opportunities, more amenities and things like that. Our quality of life keeps improving. Commercial properties, appreciation happens 2 to 3% every year. In this particular property, we have assumed a 7.5% appreciation after the end of 4 5 years. And that would typically be the range in most commercial properties. So that's the data point. I hope I answered that question, Raghav. Am I missing anything?
No, I think you covered it all. I want to club two, three questions here. A lot of people are
Sure.
asking, what is the lock-in period? Are their investments liquid enough? What are the clauses for early exit? And how is their principal secured? And these are very, very prime questions from the
Absolutely.
perspective of NRIs and OCIs.
Sure, sure. So this is the main the holy grail of real estate investment, right? Because most of us, including myself, uh, 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 we've burnt fingers or at least the nails at times as far as investing in real estate is concerned. Especially NRIs, obviously. In my banking days, I've dealt with NRIs, and I used to hear their pain points quite a bit. um, Let me give you a quick trend. Why do we all buy real estate? As Indians, I think we are still wired to owning land, owning properties. Although there are a lot more asset classes available, especially for you global citizens, there are a lot more avenues for you all, right? Somewhere we are still wired to buying real estate, and that will not change. And maybe it should not change because you want security, you want legacy planning for your family, for your kids, for your parents back home, or whatever. Now, the point is that uh, the problem with buying typically flats or is that you typically buy it in your hometown or buy it, from a branded builder somewhere where you heard from your friend or something like that, and you invest and keep. Exit always is a big question mark. And I have been from residential real estate, so no for or against. But in residential real estate, the supply is much more. You are buying a flat in a community where there are 200 apartments, sometimes 2,000 apartments these days, right? When you want to exit, you of course invest for security. You have your flat, maybe you're making 2.5% yields through rent. That's the tops you will make in terms of rent, for sure. You won't get a penny more than that. But when you want to exit, which is the larger problem, when you are in a part of a larger community, the exit becomes quite tough because your flat, your apartment, your condo is one of the several that are available for sale. That is not the case in case of a commercial property. Commercial properties, especially grade A supply, the supply is much lesser. They are few and far between. Just like I told you all earlier, very admittedly, that we grabbed this property with both hands because we were not getting any other property in this area. And that's what will happen even when we resell the property. Um, that's one part. Now, the addressing the next question, what is the lock-in? Technically, there is no lock-in, guys. What you are doing is you are owning a share of a company that will own this property. And for a simple reason, I'm just repeating at the risk of repeating, a company owning the property makes life easier for everybody instead of 100 people owning the property directly, right? So on the registration sale deed, it's the SPV that will own the property and you own the SPV. Depending on whatever investment you make, you'll get your percentage share ownership. And through the compulsory convertible debenture, every month we'll pay you the rent. That's how the structure works. And this is a structure, by the way, that is created by Deloitte Consulting, which is one of the top four. And it's working pretty well for us. So technically there is no exit. You can sell your share whenever you want, because while I gave you an example of you're probably owning about couple of workstations, let's say if you make a 25 lakh investment, but that is just for correlation. You are not owning the you're owning the share. So you can maybe sell it to the next guy who bought, your friend or anybody else. You can come to us, we can find the investor for you. But most importantly, a very big update. I don't know if you all are aware. I don't know, Raghav, you and your team are aware, but I guess you guys will be aware. SEBI has recently approved this as a micro sector and medium REIT. So, like I said earlier, so far, most of our investors who wanted an exit for whatever reasons, maybe financial constraints, or they have enjoyed their rent earning and now they don't want to wait for the exit or whatever, they've come to us. We've managed to give them an exit. Only 2.3% of our investors have ever exited so far, and that's a data point. Because most people, once they start getting that SMS every month that I've earned so and so rent from multiple properties, they want to keep earning that, right? What is the need to sell? So that's one. And secondly, we after 4 to 5 years, we obviously want to resell the property, because, by the way, our fortunes are linked to the performance of the resale. uh, we if we don't make money if the property doesn't get resold, and that's how our futures are linked together. So we are
Right.
very, very incentivized to resell the property after, whenever we find, obviously at the right price, at the right property, but a modest 7-8% appreciation is also good enough. And that's how broadly it works. Once the SEBI framework comes into place, which is, we are estimating about 2 to 3 months from now, your share currently is an unlisted share. After the SEBI framework, your share will become a listed share. You will no more be dependent on an hBits or an intermediary or anybody to resell your share. You can go to the marketplace. If there are buyers, you can sell your share. Our job, to comply with the SEBI rules, is to every 6 months update the mark to market value of the property through certified valuers. So you know what value that you should expect from the market when you want to resell it, right? Obviously, the ultimate way to resell the property is when we actually sell the property back after 4 to 5 years or 3 years or 6 years, whenever it is. That's the best way to get your appreciation, because, like any asset class, whether it's mutual funds, stocks, anything, 3 to 5 year horizon should be the bare minimum if you want appreciation, right?
Right.
And especially in commercial real estate. So that's how it works. So technically, guys, just to summarize, there is no lock-in. You can exit anytime. Ideally, when we resell the property is when you get an exit.
Sure. So, Mir, we have a couple of more questions. So,
Yeah.
let's do it quick. So, one is, how is it different from REITs? I think we have covered it. Once the SEBI framework comes into play, it would be as similar to that of REITs, and clients would be able to sell their shares on to anybody they wish, right? Another question is,
Yes.
at the moment we have Gupshup as a tenant. What if Gupshup decides not to continue anymore? How long typically does it take for you to find a new tenant?
Sure.
And what if,
Sure.
let's say, if the property is unoccupied for 2, 3 months, how does hBits take care of it?
Sure. So that's a very simple, straightforward answer. It is something which we term as a vacancy risk. Uh, uh, Basically, we do a very thorough due diligence on the leave and license agreement with the tenant. Like I said, this one is a 5 year term from now, which has a 3 year lock-in. Um, After 5 years or 3 years or whenever, for whatever reason, if the tenant chooses to move on, there is a minimum 6 month notice period that the tenant has to give to the property managers, which is basically us. We do it for on your behalf. 6 months is half a year. Typically, if it's a grade A building and a good location, and especially a building like this where there is actually no supply, it's not very difficult to find a new tenant. Finding a new tenant typically is difficult if it's a very large floor space, like let's say a 1,50,000 square feet or something like that. This is a very small 13,000 square feet floor space. Very easy. Worst case situation, if it does not get tenanted after the 6 months also, let's say we take 2 months, 3 months extra, even after the 6 month notice period is over. Yes, there is no rent. If there is no rent, we can't pay you any rent. Your ownership of the property, of course, continues. As soon as the tenant comes, you start earning the rent back. And that's how it works. Like, it's like owning a flat. If your tenant has left and if you've not found a tenant for 2 months, you're not going to make money, right? But your property is right there. So that's
Right.
the same logic that works here.
Perfect. Another question I think a lot of people are asking is what is the difference between an entry yield and an expected IRR? Also, how are the yields calculated?
Sure. So basically, I mean, all can review the financial model, which has a lot more details, but I'll just give you the headline story. The rental yield is basically comprising of two parts. 90% of the part is the pure rent that you're making, right? That the property is making. So let's say you are earning 20,000 rupees rent from this your investment every month. About 17,000-18,000 will come from the actual rent, but the tenant, like all tenant agreements, has given some deposits, and there are some reserves that they contribute to as a tenant, and in some cases the landlord. That money doesn't sit idle, right? That money earns fixed deposit income or interest or whatever. We pass that interest income as well to you, because from a ownership perspective, we don't own anything, right? hBits is just the property manager. So whatever income comes, the rent and basically the interest income on the reserves and things like that, we put it all together, and every month that you get the credit that you get, your gross inflow is comprising of these two main head line items. Less, of course, the tax deducted at source and the management fee that we charge.
That's my next question. What sort of taxation are we looking at on the returns for NRIs and OCIs particularly?
Well, it's like any other investment product, Raghav. It's an interest income, technically speaking, while it's a rent, but it's in the form of interest because we have issued a compulsory convertible debenture. So it gets treated like an interest income, like any other asset class that you own. So all your income from India, depending on what your status is, will be treated as per your Indian income tax slabs. As most of you would know, there is a tax residency certificate that you have to submit. So you will get the tax that we have to deduct from source is just 10% generally from whatever income we are passing on to you every month. Like a resident Indian, you just have to submit your TRC, which I'm sure most of you are aware of. So if you do that, it's and then it's the regular income tax slabs like any other asset class.
Okay, perfect. Second is what are the outgoing concerns about the property markets which might affect the distribution of the rentals? That's another one.
Mhm.
And who decides the exit timing and the pricing for the investment? So say for example, you were saying that you are looking to sell the property after 4 5 years. So what
Right.
factors essentially would take a look at while selling and who
Yes.
decides the timing?
Sure. Sure, very good question. I really like the question. We do two things. Basically, we keep availing the services of two, and I'll just give you a quick detail. So, like the likes of JLL give us valuations of our property every year. As per the new SEBI norm, we'll have to make it twice a year now, as per the compliance. And they obviously are certified valuers, so they have a certain process of how they value a property. And we pay them a fee, so there is no conflict of interest. We pay them a fee for valuing, like any professional vendor. So that's one part. Secondly, we also have a dedicated investment team that keeps ears to the ground in terms of market intelligence. Typically, we will start hunting for a new buyer after 3.5 years. If the appreciation has reached close to the target appreciation that we have already projected and written on paper right now, if we already see both by the official valuers as well as by our own ground intelligence, we start putting the property in the market. Of course, as you know, it's a process. It's not a small property. It's a 27 crore property. So it takes time to find a buyer, but we start looking for a buyer. Once we find the buyer, we prepare the entire presentation in terms of this is the price value that we think is right as per our valuers. This is what we believe is a good decision. This is a good buyer. We present the entire thing to the co-owners of the property in the so-called SPV, and we need minimum 75% voting from all the co-owners. If 75% people agree with all the data that we provide, our job is to then follow your instruction and say, okay, you all go ahead with this buyer, and we'll sell it. In terms of a process, we have to call a proper extraordinary general meeting, which is a which is compliance to the Companies Act of India 1956. So we do all those compliances. We present the paperwork. You all give us a consent. We sell. And that's how it works. By the way, just a quick mention, we are one of the only fraction owners who have actually exited a property in 3.5 years. So the one of the first properties that we bought, we were very happy, and our investors were very lucky as well, that they got an exit in 3.5 years, and they got a return of 17.5% gross yield. So
Right.
so that's a cycle. And I will not shy away from saying that our fortunes are linked right from you buying the property to we managing the property, and then we reselling the property, because we don't own the property, so we don't get any of those rental incomes to in our pocket, right? So our only
Right.
income is to keep managing the property well and sell it. So our survival depends on that.
Right. Another big question which we are receiving is, do these investors have to fly down to India in order to invest in this particular opportunity? So the answer is
Not
no.
at all. That's the beauty of this investment. You have to just log into a portal. Raghav will guide you all. All you have to do is log in with an OTP, sign your expression of interest, which is just a simple one-pager document of you confirming that you're interested. Do a 5% token transfer. We will call for the entire 95% of the money in about 8-10 days from now, because it's 90% funded. And once we do that, and once we come to registration of the property, even the registration agreements, all that is to be signed digitally. So you don't have to do anything. And that's the beauty of real estate investing in through fractions. You don't have to move. Of course, you have to move your fingers, but not yourself. So it's quite simple.
Right. Another question which we have is, a lot of people are asking, can they use their NRE or NRO accounts to invest? So I think they can use their NRO accounts,
NRO accounts, yes.
and
Yes.
rentals would be deposited in the NRO
In the
accounts.
NRO account. Yes,
Yes. And yes, the money
absolutely.
can be repatriated. You can repatriate up to $1 million a year through your NRO accounts. You need 15 CA, 15 CB certificates to do that, which your chartered accountant can help. Also, SBNRI offers taxation services, so we can take up all of those services. Yes. So I think
Yes.
we have answered most of the questions which we are there. In case we have left any questions, guys, you can directly connect with us at SBNRI. Your respective RMs can help you, give you more details over on the property. And if you want to facilitate the transaction, we can do that for you. So I think that's it from our end. Thank you so much, Mihir. And I
Thank
hope
you,
you
Raghav.
guys liked it. And we will keep doing these webinars again. So please keep joining us. And thank you for joining us over on the weekend and giving us your precious time. Thank you so much, guys. Thank you so much,
Thank you,
Mihir.
everybody. Bye bye. Have a great week. Cheers.
Bye. Thank you so much. Cheers. Thanks.